Hello everybody, welcome to TraderMerlin Show for your Monday afternoon edition, getting near the holiday break yet again. Finished one holiday break and here we are getting ready for another one. So welcome everybody, good to see you, Harrison. Glad you could finally make a show live again. Jerry, Katut, Lisa, Eric, Sue, best wishes from sunny-ish California. Kind of muggy here today, a little ugly overcast. We got Kenny, John as well, Les Gold, and David as well. Good to have everybody with. And Big Eb, yes. Today's show is going to be kind of what Big Eb is talking about. He says, in trading, like golf, the toughest distance to navigate is the 6 inches between your ears. Yes, it's a mind game to be sure. So we'll definitely cover all that. Hello, good to see you, Tom, as well as Jimmy T. I'm going to start things off with just kind of general housekeeping. As you guys know, I'm doing a challenge for myself and pushing everybody to do something to help improve themselves in one way or another. So we've got a few contenders. I'm doing 100 push-ups. Tom's doing 100 push-ups. Legs, curls, lunges. I mean, Tom's just going into beast mode there. Les is going to walk 6 miles every day. He's going to do an hour of trading education as well as a half hour of reading. And then the most important one, which I didn't get a chance to fit on there, says, spend some time with my wife. Probably one of the best investments you can make right there. And ladies, spend some time with your husband. Let's see. Tony's going to do voice lessons for 1 hour a day as well as a half hour of gym. And then Michael just sent this one in. He's going to do 1 mile a day walking with the 2 dogs. And I assure you that your dogs will be extremely happy for that as well. All right, so that's our December challenge. If you want to be a part of that, it's just something that you pick it and you do something every single day. I actually take Fridays off just because it's a kind of a break for the muscles to recuperate, but I try to do it every single day for an entire month, whether that's read a book, study a language, practice fencing, who knows, whatever it is. Pick something and just stick to it for 30 days and see how that might change your physique, your mindset, your mentality, psychology, whatever. Okay. So I'm going to start this off a little bit different today. And again, if you want to be part of that challenge, email me at TraderMerlin@gmail.com. I'm going to read off one of the questions that kind of spurred the show today. And again, I thank you guys all for sending in your comments, your questions, your feedback. It helps steer the way that the program goes. If there's ever something that you absolutely just don't want me to mention or say online, type in there, hey, don't mention this on the show or stay anonymous. Because sometimes I'm like, ooh, it's a little personal sometimes, the information that gets sent in. Daniel, you don't get any prizes. You get the personal satisfaction of knowing that you finished a goal and accomplished something and are ready for the next month to do even better. So let me read this one. Let's bring it over here. It's a long-winded one, but I want everybody to listen to it because I think we all suffer in some way, shape, or form from the exact same thing. What really resonated with this email that Mike sent is obviously it's passionate, it's heartfelt, but it also it runs in parallel to a lot of things that I did wrong in the early days. And again, when you're making all these mistakes, you're like, well, how do I get past this? And at a certain point, if you don't fix them, most people just drop out and give up, which would be the worst thing you could do. It's about how do I fix it? And trading is so much about psychology that a lot of people just don't reach out and get the help for that. So let me read this one to you. This is from Mike. He says, I was trading all kinds of markets for maybe over 10 years and losing or breaking even at best all this time. I seem to have learned so much or technical analysis and about markets in general over these years, but not able to become profitable still. This is insanity, like knowing what to do to lose weight and continue to binge eat. I journal and see what I lose when I lose big time, when I get greedy, size is big, or when I'm holding the bag and watching my equity melt at times. Sometimes I overtrade, compulsive trading, and take profits too early. I keep doing these mistakes over again and again and again and wiping out many days of green on one bad day. Obviously, all psychological issues on occasion, coupled with poor chart analysis and frustration from a streak of red trades. I guess I've developed bad habits over the long period of time, or can I fix that? Or time that I can't fix, I'm sorry. How to overcome this and turn things around? I am probably one of the worst cases because I just can't quit. Maybe this became an addiction like gambling. Can't quit, can't make profits. Have you had students like myself? Not only have I had students like you, Mike, I am like you in many ways. So what I'm going to do is I'm going to have to do notes here as I go through this, but I want to just kind of show you your mistakes. I've made them and the things that I did or implemented to help get past a lot of it. Because, man, what you said there about, where was it? Journaling. I know I'm losing big when I get greedy. I have too big a size. I'm holding the bag and just watching my portfolio just evaporate. Oh yeah, been there, done that, got the t-shirt to prove it, got some tattoos from the market as well, psychological ones. So today's show is going to be about how to fix your brain, your trading brain to be more precise. So let me start off by kind of walking you through my experience and kind of how this all works for me, and then I will go back and figure out how we can maybe fix Mike. And again, as you guys are in the chat here, and gals, if there's issues that you resonate with, let me know. So yes, I'm making that mistake, or I do this, if you have something, because I can probably, I'm not a trained psychologist, but I've been teaching and trading around the world for the last 25 years. So I think in a way I should earn an honorary psychological degree. So let's go back to something I talked about, I think a couple weeks ago, which was, how to be successful at trading. And it all starts off with having a plan or approach. Now, in Mike's case, or in many of you here, you have a lot of the same foundations. You have something actually very beneficial to you, which is the benefit of experience. So if you've been trading for 10 years, Mike, you have a lot of data points to work from. Now, you said you've been journaling, so that's also very important in helping you get past this point and helping you get past that continually losing money point. So you have a plan, and when I mention plan, there's the business plan side here, but I think here it's kind of your trading plan, which is, what is that analysis that you've learned? You mentioned a couple really important things. Number one, you start to lose big when you get really greedy. Okay, well, that's an easy one to fix, my friend. Very easy. You also mentioned, let me just real quickly go back and read it because I can't remember all of them. When I get greedy, when my position size is too big, easy one to fix. Or when holding a bag and watching my equity melt away at times. Those are three things that are extremely easy to fix. Number one, if you are losing money when you get too greedy, then you need to put a circuit breaker, a limit on the top side where you said, you know what, I'm not going to trade bigger than this. And my example might resonate with you, Mike, and that's this. I realized after probably, a year and a half of trading that I had to really do a deep dive into an analysis of what I'm doing wrong, because I kind of felt like I was you. I felt like I was just spinning my wheels. I felt like I was frustrated. I was like, I know I can do this. I believe I have the skill set and the brain, but for some reason it's not just translating into obscene profits on my end of the day trade sheets. So I went through and started doing deep dives data-wise every day, and I started to really break down things that I found totally incredible that nobody ever taught me. And the point I'm going to make here for all of us is every single one of us in this room right now is different. Your numbers will be different. Your times of day, all the things I'm going to say are going to be different for you. You have to find out what those are. So let me show you an example. This is something that absolutely changed my trading life. Here is a breakdown of what my profits would look like when I was trading here in Southern California back in the late 90s, right? You notice that there's this huge run up, an awesome run up right in the morning, and then it seemed like in the middle of the day I would just give money back. It was this slow decline and just kind of blah, and then all of a sudden near the end of the day it would pick up again. And I have this labeled as East Coast time, 9:30 East Coast time to 4 p.m., so regular equity market hours. And of course, you guys, you can translate this to any market, any asset class you want. Now, until I did this analysis, all I knew was I would go home at the end of the day, and I guess I thought at one point I was up like $6,000 today, and now I'm going home with like $1,000 after commissions. Like, wow, man, that's terrible. And granted, I felt great because I was like going home with $1,000, but when you're up $6 and all you're taking home is $1, wait a minute, what's going on here? Or other days where I would literally know I had a peak of $6,000 and I'm going home negative $1,000. Like, well, wait a minute. Why am I doing this, right? This is insanity. I should never walk away a loser. So what I did is I started to break this down a little bit more, and it's okay, if I can map out this curve and with pretty good regularity see that this is what my curve would look like at the end of each day, then there's only one piece of this that matters. Actually, there's three zones, if you will, that matter to me. The main one is right here in the middle, right? It's this little red box. So this is one chunk that I need to work on. And there's really only, in my mind, let me see, I think I'm going to say three, but there could be four. Four solutions for this. Number one, when you have a situation where you know that with regularity you are losing money at a specific point in the trading day, you could either stop trading altogether, right? And that would immediately do this. Thanks, get to it. I have to wear your other Indonesia shirt. I'm just in comfort clothes today. Your first choice is to cut it out altogether, right? That's just to get rid of it. That's the easiest, simplest thing to do in the market. Is just say, I'm going to remove that. Now, of course, we could maybe be a little bit more diplomatic about it and say, I'm going to try to dive deeper into exactly why I'm losing money at that point in time. Now, I know most likely why I lost money at that point in time. Anybody know why this chart would potentially look like this? Right? This is the course of a normal trading day. Why would your losses start to mount up when, this is about 2 hours in the trading day. So it looks like 9:30 to about 11:30 East Coast time. I was just crushing it with good regularity, right? That was my sweet spot. And then I would give almost all of it back, if not all of it, and then gain a little bit in that last hour and a half to 2 hours of the market. So, what would cause that? Why would I lose money at this point in time? Well, normally in the first hour or two, that's where you get the bulk of order flow, right? You have a lot of money pouring into the markets. It starts to slow down after that, as Harrison just said. Trading during slow times, right? Slow time of day, Margaret. Yep, absolutely. So what happens is a price chart may have volatility. Let me see if I can get the pen going here. Over the normal day, I'll draw like price action up here, just kind of in the red pen. I'll just do what price action is doing, right? So price action is like this, all over the place, right? And then all of a sudden, just price isn't really moving much, and all of a sudden at the end of the day, we get big moves again. The doldrums, the lunch point of day, is I was trying to trade with the same veracity. I was really aggressive in the mornings, guys. I'd trade up to 10,000 shares at a time on 1 minute charts. Right, that was my day trading habit. But the market had tremendous volatility here and then just would go flat. So I was trying to trade the same way with big share size, and it wasn't going anywhere. So I just ultimately chipped away with commissions and just taking a lot of small losses. So that was a revelation for me. We all hear, markets are flat during the middle of the day. Well, not always. And unless you see it smack you in the face like it did with me, that's what caused me to lose. Yeah, Brian, overtrading would definitely as well. I mean, gosh, I think I told you guys, my average back in the late 90s was 550 trades per day. Insanity and beyond. So you have a couple choices. Your first one is I can analyze this red box and figure out exactly what's causing me to lose it. Yep, Margaret, death by low intraday ATR. Yep, absolutely. So I can analyze it, try to fix it. I could continue doing what I'm doing, which is the stupidest thing to do. Or, as I just mentioned, for me, the simplest solution was to just cut it out altogether. So I used to get in my trading floor here in Southern California. I was in Irvine, California, one of the largest trading floors on the Western Coast. And I used to trade from 6:30, that opening bell, all the way to the dead last second and do an hour or two of research. And it's kind of a funny story, but after I made this adjustment, and this is probably, I would say 8 months to maybe a year in, as I was doing this analysis. Remember, I just traded all day. So get up early, go to the office, do some trades, come home, and I got the rest of the day to do whatever I want. Awesome. Great thing about living out here in California. What I did, though, is I figured I'm just going to go home. So this period of time where from like noon to 2 o'clock, I had a 2-hour break where I could just go do whatever I wanted. So I'd go back to my apartment, which is like a couple miles from the office, go sit out by the pool. And, I remember I was sitting out there reading one day by the pool, and I was like, I got to get ready to go back to work. And all of a sudden, these two like stunningly beautiful, early 20 models walk out to the swimming pool in their tiny little bathing suits. And I'm reading this book thinking, I got to go back to work. And I put the book down. And I go, No, I really don't. I'm not going to modify my trading style to where I'm not only going to not go back to work, but is it worth it for me to waste my day sitting around during this red period to go back and trade? And I thought, no. So I just cut it out altogether, and then that's when I really started to do well, was when I identified where I made the most money, and that was the opening 2 hours. So I call myself the 90-minute trader. Sometimes I go a little bit longer, but usually 90 minutes was my cutoff point. But I think the point I'm trying to make is pretty clear. I would never have known this if I didn't take a good look at my trade sheets. And those trade sheets should give you a clue as to a couple different things. And for the gentleman who started off with the question, which was Mike, he's the one that started this discussion. You've done 10 years worth of analysis. You've done journaling. So you should know these things. You should know what time you trade best, right? That is, if you're trading the equity markets, it's split up into 3 or 4 distinct sections where there might be better trading opportunities than others. And maybe that will help you refine how to optimize and make more profit. Is finding when you trade best and do better there. If you're trading the Forex markets, is it early morning when London overlaps New York? Is it when the Sydney and the Tokyo markets are overlapping? When is it? You got 24-hour markets. So these little pieces can help us gain a clear understanding of what we're doing the best, right? And for me, I'd rather continue to focus on doing what I'm doing the best versus finding out what I'm doing wrong and trying to make that the best. Now, I still go and find my mistakes and refine those. But in the example I just gave you here of the trading time for equities, it was a no-brainer for me. I'm just going to trade the opening hour and a half because that's just the easiest part for me to do. Why make it more challenging than I needed to? And that really became my bread and butter for many, many years. Hardest part of trading for me was figuring myself out. Yep, dig deep, peel that onion. It's not a pretty sight, Jerry. And I think the good thing here, and I'm pretty sure you'll agree with me here, is you really have to be like mean to yourself sometimes. You have to look at yourself as an employee, right? And what would the boss say to you? You'd be like, what? And again, not in this woke era where everyone's all PC correct, but, I'd like to have an old boss that goes, you're an idiot. What the hell are you thinking? Why would you trade in that lunchtime, you moron? There's nothing there. There's no meat on the bone. There's no volatility. It doesn't go anywhere. You might get lucky once or twice a month, but forget it. Get out of there. You're fired. Get out of that time of day. I want that kind of boss. And that's how I am to myself. I'm definitely... Thank you, Kenny. I definitely want tough love. I want someone to really dish it out to me and make me realize that I'm doing something wrong. Now, in this day and age, unfortunately, we can't be that way because so many people are like overly sensitive, so I have to be careful what I say. But that to me be the first piece, Mike, is let's evaluate more and make a list of things for you. Now, the other piece here, you mentioned that you lose when you start to get greedy or when your size is too big. You know who else did that? Me. I found I have the same type of curve. I just didn't redraw it for you guys here. When I got over 10,000 shares, and I know for some you're like, oh my God, that's incredible, 10,000. Everybody has a different number, right? But for me, it would change everything. And I think, Mike, this is where you're losing. This is probably the biggest piece for you. You need to set a number or a dollar amount like that you can invest per trade, and you say, I am not allowed to go past this, and stop every time. Do not violate these rules. It almost sounds like, Mike, like you've got rules in place, but you violate them all the time, right? You're kind of breaking those rules. Thanks, Margaret. I appreciate that. You can yell at me all you want. Just do it with love. So if I could trade 1,000 shares of Microsoft like nothing, no problem. My palms wouldn't be sweaty. Right, no issue. I get into 4,000 or 5,000. Yeah, granted, I feel a little bit more emotional because a small move could cost me a lot more, but no real emotional turmoil, if you will. What I found is when I got in over 10,000 shares of something, and again, it's not, I know I say 10,000 shares, you're thinking, well, what's 10,000 shares of a penny stock? It's different, and maybe we should lump it as a big number, but anytime I got into a big position, where my position was over 10,000, and most of the securities I was trading were between $50 and $100, and that part right there would cause me to freak out. If my position got too big, I'd find that my palms would get all sweaty. I started not doing what I normally do. I would be preoccupied with certain things. Like I'd focus on the level 2 screen, just stare at it without really paying attention to anything else. And like I'm praying or willing that the Goldman Sachs would start buying and push the security up. That's not how it works. And then what happens as a result of that is because your position size is so big, you are now overly emotionally attached to it. And you're like, shoot, I cannot lose. I can't take a loss in this because it's going to cost me too much. And I think by the way you worded this, Mike, this is what's happened to you. And it's happened to me too, so I'm not trying to be mean, but this is what's happened to me. Let's say on this position, you bought 10,000 shares of XYZ and starts to fall against you. And you're like, okay, no problem. And you've got $1,000 maximum loss, right? So you got 10,000 shares, that's a 10-cent stop loss. $1,000. Wow, doesn't seem like much, does it? So now all of a sudden you're down a nickel on that trade. Well, you got 5 more cents to go. Then all of a sudden it drops to 9 cents. And you look at it and go, you got your finger on the button, you're like, shoot, man. If it hits this one, if it starts printing at this 10-cent stop loss, I'm going to hit the button. I'm going to do it. I am. And next thing you know, it's down 11 cents. And you're going, shoot, you know what? Let's just go to 15. It'll be a $1,500 loss. That's fine because I know it's going to come back. And that's where you lose. Because that thing will all of a sudden, it will keep on. It's like the market knows you're scared. And it literally it's looking through your camera on your phone or your computer. It has some sensor on your keyboard that knows you're about to sell out. And it's like, oh yeah? Well, I'm going to keep going down or against him or her until they finally hit that damn button. It's happened to me time and time again. It's uncanny how the market knows that. So what I'm gathering, Mike, and again, correct me if I'm wrong if you're here today, is when you are in this situation, you're violating rules because you're telling me that you have a couple of trades that just erase days, if not weeks, of great trades. That tells me you're not using stop losses. So right away, I know you're violating discipline. You don't have rules in place to help you prevent these losses from happening. None of you None of you should ever have a loss, one loss that wipes out like weeks of trading. It should never happen. Why? Because you're not trading things that are that volatile, pharmaceutical and drug stocks. In cryptos, even though you might have been in crypto over the last week, and let's take a quick peek at what's happened, because I know everyone's been buzzing me about, what the hell's going on with crypto? Look at Bitcoin, what happened in Bitcoin a couple days ago. I mean, even if you look at this monstrous move, here's an hourly, I'll do an hourly chart. This move right here, this was huge, from 50,000 all the way down to 42,000 in a period of an hour. Even if that was happening to you, you could have had a stop loss in the system, and yes, you would have suffered a little bit of slippage, but you still would have been out, right? You would have gotten out of that particular trade. And yes, Bitcoin is ripping back up right now. It's starting to show some nice gains. So what? That's not the point. The point is, could Bitcoin, in this example, let's say you were in too big of a position of Bitcoin. Let's do this as an example. Why not? Let's go back to the left. And let me go back to a daily here. Just to paint an example, right? So I'm going to do this. All right, so here's Bitcoin as of a couple days ago. And let's say, just for an example, in this talk track on brain psychology, how to rewire your brain, you're looking at this going, okay, I can afford X amount, and if it gets below 51,626, I'm out. I'm going to exit this trade on Bitcoin. You can call this chart whatever the hell you want. I don't care, right? Make it Microsoft, Intel, Apple, Tesla, who cares? It's just the example. So if you bought this saying whatever, this little blue line here is the demand zone, it's buying the dip, whatever the case, and you say if it gets below that, that's my stop loss, you have to jump out. And at some point here, you'd be loving it, because could Bitcoin have gone all the way down to 30,000 or 10,000 or 5,000, or could it go to zero? Yes, in theory, it could. That would be a stretch for, I love Jerry, buy the friggin' dip equals Bitcoin. Pretty much. I did buy some more Bitcoin, by the way, just in case you know. But the point I'm getting at here is this will happen too, and this is part of the psychology, Mike. You cannot let your brain think that, oh, well, it's going to come back, all right? Especially with stocks. Ooh, that was a weird sound. What happened there? And then here, all of a sudden, it bounces back up, and, you still would be saving yourself some losses, but the point I'm trying to make here is you have to just know when to cut it off and move on to the next trade. Unfortunately, I've been in hundreds, if not thousands of trades that have stopped me out and then did exactly what I thought they were going to do. Oh, well, I don't care. You know why? Because at least I didn't take a loss that was so colossal that it evaporated my account, like I did back in 2001, like I did back in 2000, like I did back in 99. I've done it many times where I just let something go. And you go, oh, no, it's coming back. I know it is. You know what? I'm going to pull my stop loss here because it'll come back. I just know this thing. It's not the way it works, right? You have to be disciplined with your rules, and it almost sounds like in the case of Mike, and I think many others here, you might change your rules with regard to how you use stop losses or when you use stop losses. It should be a universal blanket on everything. Here's how I'm setting my stop losses. Margaret says, does he risk 1 to 3% of his account per trade as you should? That's just a general guideline, right? There's some people who are going to risk a lot more than that, but clearly he doesn't, right, Margaret? Because if he did, you wouldn't be erasing weeks worth of gains with one loss. So, that's a good point, is for someone like you, Mike, or others, maybe you have a percentage. And let's say you've got a $100,000 portfolio, and you say, I'm not going to risk any more than 1% of my trade or my account on any one trade. Okay. So now you have a max stop loss on every trade you make, a max of 1,000. Doesn't mean you have to lose 1,000. Maybe you lose a 500. To me anyway, it goes back to what do the supply zones look like? What do the demand zones look like? Where is the highest probability of me having a successful trade? And then I can calculate my risk and my share size from that. So a couple things we talk about here is obviously analyzing the time of day that you trade best. Number 2 would be analyzing your share size. Right, so my optimal share size, surprisingly, was about 3,000 shares. I found that that's when I did the best, and what's even more detailed there is I found that if I started with 1,000 and it was moving in my favor, I'd add another, and then I'd add another, and I'd stop there. That was just my 3,000, kind of my optimal entry. My absolute maximum was 5. And I knew that if I went over 10, it was just usually 90% of the time it would result in losses because I violated my discipline. Okay, easy. But as G.I. Joe says, knowing is half the battle. The other half is taking what you've learned and put into action. So, going back to Mike's great question here, and I can feel the pain in your talk track here. I know it's, you've made a lot of mistakes, and there are some psychological pieces. There's one here I wanted to get into, which is, it says, obviously, all psychological issues on occasion coupled with poor chart analysis and frustration from the streak of red trades. Well, every one of us is going to go on losing streaks. It's just the nature of the beast, right? There's times even the most skilled, gifted traders in the world are going to lose, and they'll lose, it seems like, every trade for a little while. And it doesn't make sense. Like, how can I apply the same tactics, same strategy, same philosophy, same stop losses, and all of a sudden it just doesn't work? Well, the market could have gone from extremely bullish mode to perfectly sideways, right? I mean, if the market looked like this, let me go scroll back up here. If the market looks like this, right, in the middle of over one day, would you not agree that markets do this over the course of, let's say, 6 months or a year? Right? So I might be doing really well, and my analysis is showing me that over this, 3-month window right here, I'm just kicking butt. Then all of a sudden, something goes wrong, and all of a sudden I'd start to lose money in my account. It's the same basic principle. But how do we know that? It's through analysis. So, I think markets have an ebb and flow to them, not only in the intraday basis, but on a weekly, monthly, annual cycle. And if we can position ourselves in it, like, I know I'm not going to make as much money in this little sideways action at the top. Well, maybe it'll allow me to reevaluate my position, start to build a short position. And you guys know that right now, this is kind of how I've been commenting on the show. Like, I feel like we are absolutely in this bullish phase, and I'm kind of waiting for this sideways box to form, and then we get to break down. And the reason I'm doing that is because in my trading plan and my analysis over the years, I realized that I make way more money shorting. I don't know why. It's just a number that comes up in my trade sheet. So if I can get in on this sell-off early, and once it starts to make new lows, then that means I have this whole next downswing in the equity markets in my favor. All right, well, I'm okay with that. But again, it's studying and knowing that everything moves in cycles and waves and has patterns to it. Does that make sense, everybody? That this isn't just from 9 to 4. This is also maybe from 2020 to 2022, right? We are going to see these types of patterns. So that's why sometimes your strategies just stop working. And that's when we have to stop and say, okay, hold on. Let me reevaluate here. Because my strategy might have worked very well in a up or downtrending market. Now, the other one would be when something's just going perfectly sideways, like we saw with IWM. Let me bring up the Russell 2000. I mean, this is a common picture to you guys at this point on the show. But Russell 2000, I mean, everything works until it doesn't. So really, for the past almost year, this thing has had, let's say, except for these 2 weeks, it's been completely inside this range. Great for sideways spread trading. Awesome. But things change. So, don't get frustrated if all of a sudden you start to lose. It's okay. What's important is that when we do start to lose, we put the brakes on slowly, right? When you start to go on a losing streak, that doesn't mean you need to slam on the brakes and all of a sudden, I'm done, taking 6 months off. Best thing to do is come up with a certain amount of days in a row of losses, or whatever the metric's going to be for you, where you can say, you know what, I'm going to stop for a little bit. So for example, if I have 3 losing days in a row, I take a 2-day break. Not that I'm out of sync or out of whack, but I know what happens psychologically. And I'm pretty sure a lot of you will agree with me on this one. That once you start a losing streak, it manifests and it starts to get even worse. Because what happens in my brain, I'm sure most of yours are going to do similar things. If I've been winning, let's say I've had 8 out of 10 winning trades in a row, I'm kicking butt. 80% is awesome, right? So you're high on the horse. You're like, yeah, I'm doing great. And then you have a loss. No big deal. I'm still 8 out of 11. And then you have another loss. Oh, okay, well, I'm 8 out of 12. Then you have another loss. And granted, they're going to be small because you're using stop losses. So all of a sudden, I could lose another, let's say, 6 in a row. I'm now 8 for 16. Now I went from 80% to 50%. My brain's going, you loser, what are you doing? And then all of a sudden, it starts to plan on losing. So for me, when I go on those little streaks, and again, a negative streak, I just have to stop and say, 2 days, it's a break. That's just a simple circuit breaker I put in place. Everybody should do something similar, in my opinion. Maybe you tell yourself, okay, in case of Mike here, let's say 1,000 is where he thinks that's big share size. Great. If you start going on a losing streak, Mike, cut your share size in half. Go from 1,000 max all the way down to 500. And if that streak continues, then drop down to 200. And that streak keeps going, either stop or get down to a very small amount. For equity trades right now, you don't even have to pay commissions, right? So go down to 1 share. My old mentor told me this one, and I thought it was stupid. I'm like, that's the dumbest thing. It's not. Go to one share. Since you're not paying commissions now for most brokerage firms, who cares? It's not about making money anymore. It's about stopping the slide, right? It's about making a change that will psychologically reboot your system. So my mentor was like, go to one share and trade until you have a winning trade. And when you have that one, celebrate it, right? You got to be like, okay, I'm now back on track. And then maybe go back to your 100 shares and start to build back up. But you have to start somewhere. If not, those losing streaks can blow your account. One of my old good trading buddies, he said, a bad losing streak can destroy your trading account faster than a bad marriage, which I thought was kind of funny. But yep. Victim mindset never works. Oh, woe is me. Don't point the finger at somebody else. Don't go to, point the finger and go, oh, was that guy or Jim Cramer, he's screwed me with his, buy statement on Mad Money yesterday. There's nobody to blame but ourselves, guys. That's it. That's kind of why I like this profession, because in golf, you have the elements. And I think if you look at what we do, personally, I think it's like golf. We just don't get to walk around and stay healthy. We get really stressed out. But you look at a golfer, the golfers themselves against themselves. They're not battling anybody else. They're just going for the best shot they can do, analyzing all the different elements. What's the wind look like today? Where's the water traps? How's the sand? How's the grass? Is it real fast? Is Augustine grass versus that Kentucky bluegrass? I mean, what are the different factors? They're battling against themselves, and I think we, at the most simplest form, are battling against ourselves every single day, and we can be our worst critics. So remember, when you start going on those losing streaks, Mike, and any others here, you can destroy yourself by having doubt. And it sounds like, Mike, you've got doubt about yourself. You're frustrated. And I see a lot of parallels. Like I say, I didn't really make a change until I stopped and said, let me evaluate everything. And my suggestions, and let me get one more thing. In that curve analysis that I was doing back in the late 90s, price server, don't listen to Jim. There's actually a school of thought. It used to be, I want to say like 99 or 2000, these college students did a report that showed that, on everything he does a buy pick on his Mad Money round or Quick Money round or whatever it is, Fast Money round, he'll say buy, all the bull bear stuff. Everyone that jumped up, within 12 trading sessions, 100% of those picks gave back all of their gains within 12 trading days. So basically, you could just find anything that he's recommended, watch it spike up huge, and just short it the next day. And in 12 days, every single one they did analysis on gave all those profits back. So it's not that you shouldn't listen to him. You just got to know he has an agenda. He is manipulating people. So when he says buy, the fundamentals of that company have not changed. It's not a better company. The CEO, nothing. It's just his influence on millions of people who watch that edutainment show, because that's what it is. It's not a financial show. It's educational entertainment in financial markets. They fall for it. So, again, it's going back to knowing, it's like technical analysis. He's just an indicator. And if I know that there's going to be a certain reaction because of a moving average crossover, overbought or oversold on stochastics, I know there's going to be a response either from algorithmic trading or from retail investors who just follow those indicators because that's all they know how to do. Great. We can now utilize that to our advantage. So I do think there is some advantage to listening to Jim. I just can't stand the guy, so I can't do it. But, I know some people who have traded against his calls a lot and done rather well. Thank you, NJ. Appreciate it. Always contributing. I do appreciate that, my friend. Thank you so much. Pump and dump for the sheeple. I agree, Jerry. I agree. Scale down in tough times. Good. If you're driving down a road, I used to have a house in Lake Tahoe in Truckee, and I'm going to drive normal. I'm going to be doing 55 miles an hour, but it gets so cold at night that you get black ice. I would drive 55, and then you hit that first little patch of ice. Do you think I'm driving 55 anymore? I don't know if anybody here has hit black ice before, but when you no longer have control of your vehicle and you're literally just going, oh shit, I have no control over and then it catches again, you go straight, I'm not doing 55 anymore until I'm out of that frozen area. I'm going down to 15 or 20, right? I'll stick in the slow lane and be the idiot that everybody's honking at, but that will launch me off a cliff. I die. I'm not into that. So similar in our trading, right? You have to just go, I'm struggling right now. I no longer have control of my vehicle, in this case, my trading right? I'm taking on big losses. So stop, scale back, and just crawl like a baby, just like you were doing with your first early days of trading. And then the last one is, what securities do you trade? This was one that it's the cornerstone of my trading plan, honestly, because I never knew this, but there are certain things that I had a pattern with for 2 years. It's so bizarre for me to think this way, but for 2-year increments, I traded predominantly. I'd say out of those 550 trades per day, 95% was one company. And for 2 years, it was Exodus Communications. For 2 years, it was E-Trade. For 2 years, it was Juniper. I was like, well, why 2 years? I have no idea. But all I knew is on those securities, I made the most money. Period. So I don't really care what the company does. If I can prove to myself through my analysis, through my spreadsheets and trade logs, that I make money with the stock that sells toilet paper, then I'm trading that one. Do I really care about the companies? I do not. When I'm trading, especially in equities, I just want to make money off of it. That's it. I think we all agree. None of you are going, oh, well, I'm buying this. Well, let me take that back. That's condescending. But most of you probably aren't looking at it going, I'm buying this company because I think they're the greatest one in the world. You're buying it because you think it's going to go up in value. And that might be because it's the greatest company. I'm just buying or selling something because I think there's a price move coming. That's it. So one of the things I've done also is I've found that there are securities I lose money with consistently. I already told you, biotechs and pharmaceuticals, drug stocks. It's got a track record for me that's just very bad. So no biotech or drug stocks. Cut them out. There's plenty of other stuff. What was the other? Oh, Apple. Right? So Apple, for some reason, back in 2000, and again, that's 21 years ago. You would think I'd be better and could get past it. But I made a note to myself, and again, this one's really going out to Mike. I made a note to myself that says, I can't effectively trade this security right now. And again, I have multiple choices on what I can do to fix it. I can research it. I can, spend all my time trying to make it better. What I did is I just said, well, Apple's one of 8,000 different securities. Bye-bye, Apple. It was the most popular one of the day. Bye-bye. I don't care. I'm just looking for what's going to make me the most money. And again, that's all analysis. So you guys will find, whether you are stock traders, Forex traders, futures traders, you'll find there's some things you just don't trade well. And you're probably going to try to trade that more because it frustrates you that you can't trade that one well. That's the kicker. Because I remember I started going back to Apple like, oh, I can beat Apple. Okay, come on, I got this. Let's get Apple right now. And it would take more of my money, and then more of my money, and more of my money. I'm like, son of a... I'm just... Pissed me off so bad. Anyway, I finally just put it on page 3 of my trading plan. It's got an Apple logo with a circle around it and a red line. Can't trade Apple ever again. Done. Now, I have traded Apple since then, but that was an options trade, so technically I didn't trade Apple. I traded a derivative of Apple. I know, I broke the rules. Let's see, Jim. I really get why people call BS when I'm fine staying in the stock market when I'm down. If I didn't plan on it being a trade and more of an investment, like me, I did. Hold on. When I'm fine staying in a stock, when I'm down, if I didn't plan on it being a trade and more of an investment. Well, again, Jay, I think you have to have parameters for it, right? So if you initially open the trade on, let's say, stock XYZ, and you said, I'm buying this one because I think it's going to go up. Okay, great. But where's your stop loss? Even though it's an investment, there needs to be a floor where you say enough's enough because it's opportunity cost. If you bought XYZ at $50 and you said, I think it's going to go up over time, and then it drops to 40, and then 30, and then 20, and then 10. Now you're holding this, and your opportunity cost is shot for how many months or years until XYZ gets back above 50. So what if we put a stop loss at 48? Right? Okay, great. Got out at 48. And maybe I buy back in when it dropped down to 20. I'm now winning on multiple fronts. I'm still getting stock XYZ that I wanted long, but I'm also getting it a much lower trade. Jay also says revenge trading. This is an absolute killer. Oh God, I didn't have that on my list of things to talk about today, but thank you for bringing that one up because it is a killer. Revenge trading, guys. If you have a bad trade, we've all been there where you just yeah, damn it, and you slam your fist down, you walk away, you're all angry, and you throw something at the wall, and then you go back down, you sit down at your computer, and you're like, you know what? Oh, this setup looks better on XYZ. I'm going to buy some right now. You know what? I normally trade 1,000 shares max. I'm going with 2. And you buy 2,000 shares. You're asking to be beaten up. Do not revenge trade. Move on. Learn from it. I had a rule where if it was a normal loss, okay, I can trade it again. But if I violated my rules or I took a big loss on something, do not go back and try to trade that same day. You're psychologically preoccupied with it. You're emotional about it. You're angry. You're going to make bad trades. So those are extra little pieces there. And I totally agree, Jay. I think that's a pretty important one. All right. Yes. Well, if you made some, I mean, it wasn't a bad day for Apple. It was still up 2.15%, but there was some opportunity in Apple today. Tell us what your Apple trade would be, and we will do the opposite trade. Back then, it was when I was high-speed trading, Tom. So I would be like this. I'm going long Apple. Oh, I'm out. I'm going short. It was that quick. It's crazy. Crazy times. Crazy to think I traded like that back in the day. Just reckless almost. So Mike and others, I think that, that was a lot of talk track on how do we fix these things. And again, it starts with the overall plan. It looks at evaluating, and for me, that evaluation is what times are you trading best? What size, position size, or contract size are you trading effectively? There's going to be a point of diminishing returns for all of these. Which securities do you trade best? If there's a security on your list that you consistently lose with, then just delete it. If it's I don't know, corn futures, you're like, oh man, it seems like I lose 9 out of 10 trades on corn futures, then forget corn. Just move on. Don't even have it on a watch list. Never look at it again. Who cares? Move on to something else you are making money with, because I guarantee you, everybody here, regardless of how successful you are overall, every one of you has some security that you trade well. And I don't know why it's like that. I have no clue why it's like that, where there's something we just gravitate towards. Like I told you, mine was like a 2-year cycle with these companies, and I don't know why. And all of a sudden, after 2 years, it was like my results just started to taper off. Okay, I went and started looking for something new. Found a new one. Great. Stay with that for 2 years. I feel like a loser. I keep messing up on SPY options. Well, don't feel like a loser. Just analyze it, right? What is it potentially that is causing you with those SPY options? Now, granted, we have implied volatility. It's been significantly higher here over the past couple weeks. You got some pretty big swings going on in the marketplace, especially with these the market sell-offs, right? So you're going to have issues with your implied volatility. So all your Greeks change. When markets are going up, IV's not so bad. When you start seeing the panic selling, then all of a sudden things get a little bit out of whack, and all those Greeks change. All right, your Vega, your Delta, your Gamma, Theta, Rho, all that stuff is changing and changing quickly. So the dynamics change. So to me, that's actually one of the most challenging asset classes out there. Oh yeah, gosh, don't mess with SPACs, Jay. It's funny, we did a show on that one a while back. Let me just see Dwack, right? Just because this one just cracks me up. Oh wow. Down 2.5%. I'm just waiting for the day this thing drifts all the way back down towards its initial strike price. It's kind of a crazy one, this Dwack. Yeah, SPACs. To me, I won't touch them again. I learned my lesson with SPACs on my BKKT or BKKT. Fortunately for me, I actually made money on it. Why is it hard to borrow stocks that are tanking? Because generally, people are liquidating their long portfolios. So you're not allowed to borrow it from somebody when their inventory is declining. So let's say I'm going to use a simple example here. I've got 10 customers now, and let's say they all have 1,000 shares of Microsoft, right? So that means I've got 10,000 shares as the broker. They're sitting in my books. I got 10,000 shares of Microsoft because I have 10 clients. With that, I might be able to, and I don't know what the ratios are, maybe it's 30%, right? So if I've got 10,000 shares, maybe I'll let out like 3,000 shares to be borrowed, where people are going to sell those shares and go short, right? But if all of a sudden Microsoft starts to tank, maybe 5 of my clients decide to sell their long position on Microsoft, and I'm now left with 5 people with 1,000 each. So now all of a sudden I have 5,000 shares total in my pool. 30% of that's like 1,000. I might just go, you know what? It's too thinly traded. I'm not going to lend out to my clients right now. That's normally what happens. Yeah, there's sadly, you guys mentioned fun and which was not so fun, and Dwack. Let me go PHUN. These SPACs are tricky, man. This is, God, look at this one. I didn't even look at this one, but funware, not so fun anymore. It looks like it's drifting right back down to this dollar mark. RKLB. Haven't looked at that one either. Oh, Rocket Labs. Yeah, you were always on that one, NJ. We were always checking out Rocket Lab. If anything, Rocket Lab, I hate to say it right now. Personally, I wouldn't touch it because the chart looks really weird. But if you are going to take a stab at it, now's the time. We didn't get a close below this low from October 18th. So, in theory, you are looking at a line in the sand for it. It didn't close below it today, but it's still too risky for me to want to jump on it. But, if you are, you're at a demand zone, right? You're at a point where it hasn't been below for quite some time. If you were to buy it at any spot, that would be the time. But yeah, I like things got better trends, strong trends. That's the best for me. All right, let's see. I didn't put in the earnings calendar stuff because I was just running behind today. But yeah, I guess that's it. Man, I didn't realize I would go for 40 minutes on that one. 46. All right. Well, hopefully, Mike, that helped you out, and maybe give me some updates. Let me know what steps or measures you're putting in place to be circuit breakers for you. It seems to me, just from the sound of it, you're not using stop losses. You're probably maybe even adding to losing positions if they go too far against you. So that's kind of a dangerous thing in there. I think if we looked at the different variables I talked about, which is whatever plan it is that you're using, that's irrelevant to me. The plan is kind of your overall strategy. Great. There's tens of thousands of different strategies to use. Of course, I'm a supply and demand core strategy person. But then you look at things like you mentioned, the time of day, the share size, what securities they are, and really be introspective in those and say, okay, which one is working the best for me? And start to modify not only the times you trade, the securities, etc., but more importantly, looking at yourself and saying, I have to put stop losses in place. And it sounds like there's an inability for you to pull the trigger when it hits your stop loss. So put them in the computer and say, now the computer will do it automatically. Even though I don't want to get out, right? It's my stop loss. Nobody wants to lose, right? There's nobody here in this room that's going to go, man, I love trading. It's all about losing money. Can't wait to lose some money tomorrow. No one's saying that. But, there's going to come times where we lose. It's okay. You just got to move on. Again, I use the analogy of red lights. From my house to the office here, there are 10 stop lights, street lights on the way. And I've had 1 or 2 times in the past 12 years where I've hit every green light along the way. And you're like, this is it. Now I'm on a roll. Awesome. The other part is there's going to be days, and I've had them as well, where it seems like I hit every red light. And it's always when I'm late for work or I got to be in a meeting, I just need to get there right away. And it's the more red lights I hit in that progress. So after I hit like the 5th one in a row, I start getting angry. Hit that 6th one, I'm getting more angry. That 7th one, at this point, I'm like pounding my dashboard, and so I'm like, come on already, move it. That's trading in a nutshell, right? You're going to have that period where you go on those red light streaks. Well, stop, evaluate. Maybe take a breather, go take a couple days off. I did channel my, it's funny, I've actually worked with Dr. Woody so much. I was hoping to contact him. I've just been so busy, I didn't get a chance to reach out to him, but I'd like to get him on to help. He goes deeper into the psychological aspect. I try to keep it almost like street level psychology, which is how I relate to things, and just the simple mechanics of implementing a few real key pieces and steps to get past those losses, those major losses. Hey, Don, good to see you. Don's all over Twitter now, man. He wasn't even there before. Now all of a sudden, I find you everywhere, buddy. Good to see you. Trading the Zone is a great book of psychology. I highly recommend it. Yep. Harrison, I like that one. Yeah, when you start getting those palpitations, there's 2 really good psychology books. As you mentioned, Trading in the Zone, and then I think there's one by Dr. Alexander Elder called "Come Into My Trading Room." Those are pretty good psychology books. It's just dealing with the mental challenges, which I found to be the biggest, most challenging pieces for me. All right, so that's it for today. I was going to have Bill Addis on tomorrow, but he's going to be doing a companion session for his bond series for OTA tomorrow, so he's occupied. So for those who are in his bond class, make sure you check out his companion session to get the updates. But I will have him on the program on Wednesday. So tomorrow is kind of an open book. If there's something you guys want me to discuss on tomorrow's show, let me know what it is. Just email me at TraderMerlin@gmail.com, or you can put your comments down below the YouTube videos. I'll try to sift through the robot spam about cryptocurrency experts and porn on the comment area. I've been doing pretty good on that one, but that'll do it for me today, everybody. Don buying Dwack. I don't even think Don will buy a Dwack. Anyway, thanks guys so much. Hope you had a great trading day out there. I will see you on Tuesday's show. Take care, everybody.